The Federal Reserve raised the key interest rate 75 basis points. I'll tell you what it means next. You're definitely going to want to watch this one. So we know the Fed met last week, and this has been a constant talking point in the real estate industry. There are fears of rates going up, homes not selling, the bubble's bursting, and there's a lot of noise in the marketplace. So let me tell you exactly what the 75 basis point increase means for consumers that are looking to transact. And there's a couple things that are happening here that are in play right now. One, if you look at Chairman Powell's message, his key message after the meeting, after they raised rates 0.75 of a point, or 75 basis points, is this: we are here to fight inflation. And he went on to say they feel like they might have gotten inflation under control a little bit after the meeting. Inflation peaked to 9.1% prior to the meeting, and a lot of people knew that they were going to raise rates again anyway. And if you look at the June meeting, rewind about 30 days, rates jumped up dramatically before the meeting because there were rumors of the previous 0.75 point increase, or the 75 basis point increase in June, and rates jumped up, and then all of a sudden they came back down a little bit. They came down to like that high 5 range because banks needed purchase money business coming in on mortgages. So the banks already baked in this pricing, and what we've seen is that Chairman Powell was very clear that inflation might have peaked at this point, and we may be on the other end of this. So you got to really look at the messaging behind this. Secondly, Chairman Powell also said that there may be a reduction in the future on the key interest rate because they feel like they may have gotten inflation under control. It might have peaked already. So it'll be interesting to see what happens once they chart these things, because inflation is always lagged. You get the data after it already happened. So they're talking about maybe making a reduction in the future. That is the first time we've heard this in months from the Fed, so that's really important news. Third, the short-term bond market and the long-term bond market have been acting a little differently. As the yield has gone up on short-term bonds, it's also gone up on long-term bonds. And the long-term bond is really eyeing inflation. So when you think about lenders and how it affects mortgage rates, they're committed to lending money for 30 years, not just in the short term. The last time we saw the 10-year bond levels this high, mortgage rates were 1% lower than where they are now. And this comes from my good friend Eamon Cantwell at R5 Home Loans. He has a really great assessment of this. So what all this tells me is that we might have seen the peak of interest rates. Lawrence Yun, the chief economist for NAR, he said the same thing. We might have seen interest rates peak. And after the meeting, there was no movement on rates. So there's a lot of things at play here. And here's what I know. Inventory's starting to come up a little bit. We've seen inventory jump up, and a lot of people are expecting this to continue through the summer and into the fall. That's number one. Number two, we did not see mortgage rates move after the Fed meeting. So all this rhetoric I just gave you, all this data, all these expert opinions look like they might be right because we didn't see rates jump up like they did right before the June meeting, which tells me that banks have already priced in the new rates into their mortgage pricing. So for sellers, here's what I know. The good news for you is that rates have kind of stabilized a bit here. Let's hope it continues. None of us have a crystal ball. So if rates stabilize, that's going to keep affordability where it is, which is historically low. These are historically low rates, just not as low as what we saw the past 24 months, from 2020 up until about June of this year, or even really January when rates started jumping up. So that's number one. We've seen rates kind of stabilize here. What I don't like if I'm a seller is that stabilization is going to cause more people to take their homes to the market. There's going to be more competition, there's going to be more inventory, and that affects sellers because you want to be the only home on the market. You want to be the only option for people because demand is still very strong. So if I was a seller and I was thinking about maybe a fall sales date or maybe even next year, I'd be putting my home on the market now while inventory in our market in the suburbs is still below a month's supply, and in Philadelphia is right around that 2.5 month supply. So sellers, I'd be moving up my timeline and not gambling on what could happen in 3 to 6 months. Buyers, this is your window of opportunity, right? So you have been waiting for the market to kind of move in your favor for a couple years now. Inventory's coming up a little bit. We're seeing inspection contingencies get accepted. We're seeing homes sit on the market more than 2 days. And we're also seeing rates kind of stabilize here. So if you can't have it both ways if you're a buyer. That's what I know. You can't have low rates and no competition. So the rates have kind of been the trade-off, but you can make a slower, more deliberate decision than you were able to the past 24 months. And all of this is relative. Just because the Fed is doing this now, we're going to have to see what happens in the coming meetings. We're going to have to see what happens with inflation. I do see a window of opportunity here between now and the end of the summer for sure. The next 30 days, if you want to get into a home, you're eyeing something up, there's an opportunity to make a move that's going to be a more deliberate one. You have more time to think about things. You can get the contingencies that you want instead of having to be in that run and gun sort of market that we saw the past 24 months. This is a normal market. This is what the market was like before. So there's no reason to be alarmed. It's just an opportunity. You're definitely going to want to watch this one.